Hey guys, it is Julie here with JT.Wealth. In today's video, we are discussing the rising tide of China's EV market. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are chatting about the Chinese EV market and specifically the three companies that are absolutely dominating it right now. Specifically, we are going to be talking about NIO, Xpeng, and Li Auto. We're going to cover their recent and upcoming earnings reports, some future outlooks for their stocks, and plus the most recent short seller report. And just before we get into all of that, if you enjoy this video, make sure you show us some support and hit that thumbs up button and leave your thoughts in the comments down below. Other ways you can help support the channel is to check out some of the great links we have down below in the description. This includes a link to my Patreon page where we share different investing topics and our Discord chat group, as well as some referral links. Webull right now is giving away 3 free stocks just for signing up and funding your account, so check out those links. Okay, so Xpeng and Li Auto have already had their earnings reports this week. So we're going to take a look at the results of those and the movements in their stock price. And then we have NIO coming up next week, so we're going to take a look at those expectations. Now, the reason that we are looking at all 3 of these companies together is that they're largely looked at as a group, as they're all homegrown Chinese automakers focused on what the government is calling new energy vehicles. So the first is Xpeng, which trades under the ticker XPEV, currently trading at the $42.75 mark. They reported their third quarter earnings before the market opened on Thursday, and they were good. While Xpeng isn't yet profitable, the growth numbers were impressive. Revenue of $293.1 million was up over 340% from the year-ago period, while deliveries numbering 8,578 represented an increase of over 160% from the second quarter of 2020. Better yet for Xpeng, 6,210 of those third quarter deliveries were P7s, the company's newest model. The P7 is a plush riding electric sedan stuffed with advanced technology that starts around $35,000 and began shipping in the second quarter. Their older model, which is a small electric SUV called the G3, accounted for the remainder. Next up is Li Auto, which trades under the ticker LI and is currently at the $32.64 mark. Now, Li Auto's earnings left a lot to be desired, and this was their first earnings report as a public company, but their stock is still skyrocketing anyways. Li reported a small profit of about $2.4 million from $370 million in sales. Analysts projected a small loss from $371 million in sales, but the company actually lost a little money. Li's profit appears when excluding stock-based compensation expenses, a common practice among many companies reporting earnings. Looking ahead, the company expects to deliver 11,000 to 12,000 vehicles and generate about $475 million in sales for the fourth quarter. Analysts project about $520 million in sales in the fourth quarter, but Li is new and the estimate is only made up of 3 projections. Li Auto stock is now up over 100% over the past month. However, more bullish investors are happy with the results, with the profit, and they believe that the EV market in China is at a tipping point, meaning the demand in sales is going to rise faster than expected in 2021 and beyond. Now, looking at the biggest company out of the 3, and that is NIO. And they trade under the ticker NIO and are currently at $44.81. And they have seen a bit of an increase in price based on these other companies' earnings. But they have their own earnings report coming up Tuesday, November 17th after the close of US markets. Analysts are looking for a 17-cent per share loss from $655 million in sales. In the second quarter, NIO lost 15 cents a share from $525 million in sales. Now, the sales and earnings were better than analysts projected, but the stock dropped 8.6% after their second quarter numbers were released. As far as deliveries go, NIO delivered 12,206 vehicles in the third quarter, including 4,700 vehicles in September. October deliveries totaled just over 5,000. So with this incredible rise in price lately, it has a lot of people wondering how high can these 3 stocks go? And honestly, right now, that is anyone's guess. Xpeng stock is now worth $33 billion, NIO is worth about $65 billion, and Li is worth about $26. That is more than $124 billion on a combined basis. By comparison, the combined worth of the Detroit Three, Ford, General Motors, and Fiat Chrysler, is roughly $100 billion. Looking at what could happen next, using the Tesla playbook, shares of Xpeng, NIO, and Li might settle down around their 50-day moving average, as that's where Tesla settled in and after their stock went parabolic in early September. Now, price consolidation, as traders call a period of flat trading, after a big run isn't a bad thing. It gives people time to figure out what's next. Now, NIO's 50-day moving average will be around the $30 price point soon, so that is a price that the stock could go to in the near term before other catalysts kick in. Now, they do have one catalyst coming up on the 17th with their earnings report, but they are really going to need those numbers to be great. Now, we have seen a bit of a dip on NIO stock today as a report came from short seller Citron Research regarding NIO stock. And they are pulling the plug on NIO 2 years after their controversial recommendation and now have a price target of $25. So 2 years ago, they did recommend buying the stock when it was at $7. And after a rocky road of trading, NIO has found itself in uncharted territory that can never be justified by its current standing in the China EV market or its near-term prospects. The recent mania of investors flocking to electric car makers in China shows no deeper understanding of a market that is marked by price cuts. What makes NIO stock most vulnerable at these levels are two main points. First is the Tesla's Model Y pricing over in China, and that anyone who's been buying NIO stock has obviously not been paying attention to Tesla and the pricing of their Model Y in China. The brand cash of Tesla and its pricing has become a big problem for NIO's ES6 hatchback model. Previously, one researcher said that we continue to see some risk that Tesla could materially cut the price of its locally made Model Y from about $73,000 to something in the mid to high $56,000, $58,000 range. And that could potentially hurt near-term sentiment and slow NIO's order book momentum, considering it would be a direct competitor to their EC6 and ES6. And now, local Chinese analysts are predicting that Tesla's Model Y will be priced substantially below the key price point that would be a threat to NIO, according to DB. Recent estimates from securities firm are pointing at something quite remarkable for Tesla's ongoing ramp in China. As noted by the firm in a recently released research report, Tesla's strategy of passing its cost savings to customers could result in the made-in-China Model Y starting at a very reasonable price of about $41,000. So at a $41,000 price point, that would pose some serious competition to NIO. And their second point is the current share structure, saying that right now we're looking at a share structure and an investor base that is more interested in spinning a casino wheel. While the float is open after years of trading, the short interest is almost at a 2-year low. So in conclusion, anyone buying NIO stock now is not buying a company or its prospects. Rather, you are buying 3 letters that move on a screen. The China electric phenomenon is a real movement, but there are better ways to play it. Consider this, Buffett-backed BYD did $22 billion in sales and trades at 3 times sales even after being up 400% this year. And at these levels, NIO trades at more than 17 times their sales. Obviously, we will not even discuss NIO profitability. It is time for investors to rotate out of NIO, enjoy your profits, and look for the next disruptive technology. So as I've said in previous videos, it's not that NIO doesn't have great potential in the long term, but when it comes to investing like this, just remember to try and stick to a plan and don't be afraid to take some profits when you're seeing a lot of gains. That being said, there is a huge growing market in China for electric vehicles, as sales of new energy vehicles surged 105% to 160,000 for their 4th consecutive month of gains, and that far outpaced overall China auto sales, which saw a 12.5% gain in October, 2.57 million vehicles. So as I said, there's a lot of growing potential in that electric vehicle market in China. These 3 companies, though, have seen a tremendous amount of growth lately in their stock and are still fairly young and early on in their actual sales. Now, we are seeing a slight pullback on the stock today, especially after the news from Citron Research there. This could be a brief pullback. It could be the beginning of a larger correction. With any stock like this, my best words of advice is just know your plan. If you're a long-term investor or if you're looking to take profits, and what your price points for those are. On that note, let me know your thoughts on these 3 companies down below. I always love hearing from you guys, so I want to hear if you think these are going to correct anytime soon or if they're just going to continue onwards and upwards. As always, these videos are never a recommendation to buy or sell any stock. They're just for information and entertainment purposes. Any trades should always be made based on your own due diligence. If you made it all the way to the end of the video here, make sure you give us a big thumbs up and that you're subscribed to the channel. Thank you so much for watching. I hope you have a wonderful day, and cheers.